Mic check, mic check. What's going on, everyone? If it was as best as we tried to trade it, using CTM 1.0 as it evolved into where it is today, then you're looking at something that's really close to these moves over here. Going long at the top over here, but cutting that short very quickly. It was a little different. The first long on CTM 1.0 in February at 38,000 instead of 44,000. There are some subtle differences. Good call on oil. Thanks, Dave. I appreciate that. But that was a lot of hard work we were just putting in, trying our best to understand that the macro can change rapidly. The 100 basis point rate hike spoke about started being priced in yesterday, overreacting. If that were to happen, would that be the last hike? If they hiked 75 basis points, is it potentially possible that it is the last hike of the cycle because we're going to see the following CPI numbers come in? We did a really good job over the last few weeks watching that the macro could change quickly and trying our best to stay on the right side. I think I have to highlight Jurian's tweet over here today because for 3 weeks we have done our best to stay on the right side of these markets in real time. That goes back to the work that we did. And look at the data of this. Here with the NASDAQ. June 22nd, and we started talking here about what was happening with the price of oil, the price of other food-related commodities, and wondering if they do come in, what that's going to mean for Fed policy moving forward, trying to pick it up in real time. It looks like Jurian's tweet, the timing may be pretty close to perfect. And after yesterday's hot print and seeing that, yes, well, indeed, these numbers have come down. Oil's come off 20% since that last CPI print. And is it possible that we just saw the hottest print for the near term? I don't know what happens going into the fourth quarter, first quarter, 2023. I'm talking about right here. Is it possible that the Fed gets two cooler CPI prints and then is able to go ahead and move towards a pause? It doesn't seem to be the general consensus of participants out there. Nevertheless, it's it's my base case. I continue to follow that. The other case is inflation is hot, job market pretty strong. The Fed doesn't have any reason to pivot, and they're going to keep tightening until something breaks. And that keep tightening, whether or not it's a 75 basis point come in this meeting in July, and then they move towards something like in September and beyond to 50 basis points. From my vantage point, they can't do that. It would blow up the debt markets. We'll see. Debt markets right now are at a pivotal place. They would welcome a pause. We'll keep fighting it as it comes. I wanted to look at oil over here on this chart over here because this is where we took that first double black diamond sell impulse, and it was quite high at 116. And I want to look at that just in relation to using the preferred settings for CTM on stocks on the indexes. And I want to look at oil in that light with you, right? On the daily time frame, this is still holding an uptrend. On the 8-hour time frame, this would have peeled off much lower. Just a check mark, a win for CTM 1.0 type TA in that situation. In this case, keep tracking. We're going to keep tracking back and forth.
Every time the United States does something that some country finds annoying, everyone talks about the end of the dollar. But if you look at what has happened with the sanctions on the Russians so far, the Europeans have basically ceded their position in international currency control to the United States. And that means that they've joined in with the Canadians, the Taiwanese, the Koreans, the Japanese, the Australians, the Kiwis. There's only one currency anymore. And everybody really only has one place to go. Because if you look at the demographic structure of the world, the United States has the millennials. That's a consumption base now. It's a production base for the future. That's great. If you look at most other countries, they don't have that class. So the tools you would normally use to shape monetary policy, primarily interest rates, do not work in a society where there isn't a lot of consumption. That's what you're trying to regulate primarily with interest rates. So the US Fed can still do that. Most other countries cannot, which means this tightening process that the Fed is going through is making an ever larger delta in terms of interest rates between the United States and everybody else. And currency markets are adapting appropriately, We've got $2.5 trillion in negative sovereign debt out there, and money is just flooding from that into the US dollar.
Good video. Let me go ahead and share this in the link in the description over here of the comments. Then over here, well, the collapse of the EU. Everyone was following what's going on today. Euro US dollar exchange rate hitting parity. It's a big deal. Let's go ahead, and we've been looking at the US dollar. Japanese yen. Wanted to really tee off with this over here. Did you see what happened, CTM? We have a breakout of a rising channel. Beautiful in the sense, if I clean that up, you can see the breakout, the retest, right? It's not clean and clear, but it's a retest, and then the resumption off. Resumption off's a clear entry over here. But these type of breakouts of upward sloping channels, they tend to usually lead in some type of I want to say melt up that leads into potentially even a further meltdown. Now, I know people, rightfully so, don't want to talk about the dollar, talk about putting a top in the dollar, because, I mean, it's just whatever time frame you look on it, it is extremely strong. Look at that. That's Will's, right? This was Will's trend line break over here on the dollar. Imagine taking the long, pivoting back short, and then Raul's breakout of the head and shoulder, inverse head and shoulder on the dollar. But imagine being able to stay with it and hold it this whole time. And that's why people over here don't want to call it top. You could have called the top, I mean, you could have been calling it top the whole way up. Now, at this particular point, as I watch what's developing and just watching not only what we did there on oil, when we have the sell impulse, like on yields, it took 3 times. It took 3 times to catch the good entry on yields. On dollar right now, that was a good opportunity. That's stopped out as comes up. As you take out the previous high, that's then stopped out. I'm going ahead, I'm readjusting now, and I'm going to see if we have another black diamond entry. The thing about a double black diamond entry is that it gives you the best risk to reward. When you're able to catch the turn of a move, you have the most potential profit. Now, what we do in execution, CTM 2.0, that is getting the sweet spot of the trend. Speaking of sweet spot of the trend, if you look at what's going on with the DXY right now, watching this video, Peter's talking about the reason we're seeing the disconnect between the euro and the Japanese yen is because those central banks continue a policy of easing while the New York Fed is running a tightening policy. It's the interest rate differentials, and then he's adding to that the demographics of these nations. We also add in or look at which ones are energy starved, which ones are energy Sri Lanka, poor. And you can see that taking place in the yen and in the euro. And today you see the euro hitting parity. Does that mean that it's going down to 80, 85 cents and in a heartbeat? I mean, for sure, these things like this could happen. We saw it happen with oil. We're all aware. Is it the norm? No, it's not really the norm. The norm of let me pull up the euro. I mean, massive move down. If the U.S. does change policy here, and if we did see inflation peaking, we picked that up the last 3 weeks in real time. We're not playing like I noticed that people are very, very good at articulating the narrative. Or not the narrative, but what has happened. They're very good at analyzing the news and then articulating what happened. There are very few who are good at the turns making those type of calls, because that's generally when that opinion is not accepted. You see that playing out right now. Do I, think that we could see a significantly stronger dollar if we're seeing the collapse of the euro and Japanese yen? Yes. If the Fed does indeed put in one last rate hike, whether it's 75 basis points, whether it was 100 basis points, and if the market deems at that moment, if credit does not respond favorably, and the market then says something's broken, then that's the last hike, and we could be seeing the bottom of the market being put in. Now, the thing is we just don't know. Let me pull up a chart of the Bitcoin. And it's funny with the appearance is always funny to me with the Kamen, but the Kamen's performance is such that, well, it gets it, But same chart, right? If I'm looking at Ethereum or Bitcoin over here, it's the same chart. And is it possible that coming into the Fed hiking, let's say, is it possible that we see price go nowhere for the next 2 weeks, stay within this range, and then the Fed comes out with a big hike, and then we see this level break down? That's entirely possible. I mean, it didn't happen yet after the CPI, the hot CPI print, but that's because the market's forward thinking. As the market consolidates like this, it's 50-50 which way it's going to break. And that's the beauty, the absolute beauty of having CTM 2.0 trading it masterfully. Even right now, short on Bitcoin, hedged, long on Ethereum. And you could see that whether this breaks to the upside or to the downside, CTM 2.0 will position for it rather quickly. And it's brilliant. And I think that's, that's the essence of what we're doing and why we're doing here. That's a lot more important than anything else out there being able to generate, no matter the condition, even in this bear market that we experienced throughout 2022, the uncertainty of what happens next, how much worse are things going to go. The stock market has not really seen that much of a decline, right? Historically. This was shared yesterday in the Discord. I don't like to call out names because sometimes I get it wrong. I think it was Michelle, or it was Michael rather. And he's showing the current bear market. We're in bear market territory right now, right? From the peak to the bottom, declines of 20% without a rally of 20%. A rally of 20% takes you out of the bear market. Let's go ahead and view that on the S&P 500 on the daily time frame. And right now, right, she's in a bear market for about 3 weeks, right? To get out of a bear market, you're looking at 20% off the bottom. Price would have to break back towards 4,400 on the S&Ps. And if you looked at past bear markets from where we are, they could last much longer and go much lower. Now the question is, and the question always is, and no one has a crystal ball, about whether or not we're going to go down much longer and much lower for longer, or whether or not this is somewhere towards December 2018, where the Fed is about to pivot, and they're about to pivot because of the credit markets. They could only keep tightening so much on the upside without with still being able to service the debt. And that's why generally we see, this is again 2018, a similar. Now, when that pivot comes, or even if that pivot's coming in tomorrow, it does not mean that there won't be more pain to the downside. And if that's happening, that most likely occurs not only in the equity markets, but also in the cryptocurrency markets. They're just right now consolidating in a bear flag. The bottom could drop out, and whether or not that's the last bottom or not, nobody knows. From that point on, some people will think this is the last bottom, and from here it's all up. We really don't know, but we are watching the macro, because this is all about the macro. General, from my vantage point, there is the possibility that what we just saw was the hottest CPI print. The next one comes off. The next one, the cheaper gas, which just started coming off over the past 3 weeks, right? That will be priced in a little bit more. And then if the one after that is priced in as well, come September, right? September, they might hike 50 basis points, and that might be it. They might not hike at all 50 basis points. It really it's the market pricing in everything we're trying to take a look at and then watching it. And it's just as dangerous to be like, I think that right now, because we're looking at decent job numbers, we were there at the turn, right? And the turn doesn't always happen, by the way. Here on the DXY, like this one gets stopped out. The first double black diamond got stopped out. But from a risk to reward, like here's your risk, your reward is open. From a risk to reward standpoint, it's we also called the breakout over here in green as it happened and occurred in real time. It was a perfect breakout, retest, and then resumption off. If the exit or the first opportunity for an exit and then a sell impulse is coming over here at 107 for 104 entry, that's swing trading. That's fantastic. That's not trying to call the top. I don't think that people should be weary of. You should be wary of learning lessons from both areas over here, whether it's April 2021 or into November 2021. You should be weary at any point in time of allowing others to call the top, right? Because you could just always look at other people's analysis and see whether or not that aligns with yours. But if you're able to look at a dissenting view, something that's drastically different from your own, it's only going to help you make sure that you, number one, above all, continue to manage your risk. You don't know what's going to happen. Do I think that the DXY has the potential over here to continue upwards as it has been, right? I don't know which view is better. I'll look at them both. You know, I know this is better for stocks. I know this is better for the indexes. I don't know if it's better for the DXY. But just looking at it, you know, again, Will's breakout, then better than holding the trade the whole time, even though it was a successful retest, or was this Will's breakout? I forget. I think I'm gonna call this Will's and this Raul's. I have it on the other chart. I could always look at it. I want to look at it. Yeah. So that wasn't Will's breakout. Will's breakout is exactly. I mean, that's CTM 1.0 TA matching right over here. Both of them, the bazooka. And this one, of course, there's a difference. Will's CTM 1.0 TA kept him out of over here. Not only kept him out of it, this is where he lined it up for. Actually, I'm sorry, I'm rambling. CTM 1.0, I would have taken an entry even lower over here, right, and been holding it for longer. You can't argue with the precision. If the DXY is topping over here, then for us, we're gonna get an SMA crossover. The CCI is gonna flip over. We're not there yet, but that doesn't mean that we can't line up some nice entries as they occur in real time, and it makes sense. I'm not buying up here. I wouldn't buy up here. I don't buy until we get some type of corrective nature that offers some type of breakout off an angle downward sloping, like the green one over here, like over here. That's where buys are lined up. Right now, forget calling a top, just looking for this breakdown, and what this breakdown or where this breakdown leads to, you know, could just be some type of further correction in order to extend out of, or it could be the very top. You don't know ahead of time.